Are you okay? Can you hear me, Vanessa? Okay. Assalamu alaikum and a very good morning, everyone. Welcome to the first day of F8 Prepare to Pass. I'm just going to start off with a brief overview of the session today. Before I discuss the contents of the session and how we are going to go, a few housekeeping rules, please. You can keep typing in the questions during the course of the webinar as well. I will have a look at the questions very frequently and I will try and answer as many as I possibly can. The camera is switched on right now. I will be switching it off in the next minute or so that there are no internet issues at all. My name is Afaf. I teach FH P1 and P7 at SCAN School of Accountancy. The idea behind today's webinar, or well, the rest of the webinars, is to, first of all, I'll have a brief discussion about the F8 exam. So I'm going to talk about of course, the duration and all of that. Please just remember, guys, that this webinar is focused entirely on computer-based F8 examination session. So the time allowed, the paper pattern, all of that will be focused on a computer-based F8 exam. We will then discuss common reasons for failing F8. This is entirely the examiner's language. So if you are a student who has been repeatedly failing F8, this is how or where you can sort of determine where you're going wrong. The idea is to have question-based revision of key topics of the audit cycle. So obtaining new assignments, audit planning, internal control evaluation, audit evidence, review, and opinion and report. These are the main areas that we are covering. We are going to be doing questions for each of these areas as well. And while I'm revising those questions with you, I will talk about examiner's feedback, and I am going to talk about the key techniques that you need to use so that you have the right language. I'm going to keep repeating myself, but please remember that your examiner has been very specific that for her, there are two languages, the English language and the audit language. You could be very fluent in English, but if you don't know the audit language, you're not going to be able to get through the exam. So we are going to focus on the language that needs to be used for each of these areas that we will cover. Towards the last day, and that is day 5, which is Friday, and this is important, guys, I want you to pay attention. We are going to talk about computer-based examination tips. So when I discuss the pattern just a little while, you will know that section A is 30 marks and section B is 70 marks. So while you're typing in the answers to section B, we are going to talk about some of the key points that you should use and others. So this entire section is obviously me advising you as a tutor, but also telling you what the examiner expects in the computer-based exam. Very, very important, guys, and I hope you've all received this. I have uploaded something called revision notes. Now, these are very popular revision notes in quite a few countries, so you're very lucky that you're getting them free of cost. This is basically a set of revision notes which covers the entire F8 syllabus, or the key points that you need to keep in mind for the entire F8 syllabus. Please make sure that you do download them, and today from the 29th of January, you can do your basic preparation from these revision notes as well. So that's been uploaded. I will not refer to it at all, but that is something that you can have a look at and use for your preparation stage. And very, very important, another huge advantage that you guys have if you've registered for this webinar, there is something called the Campus Insight. This is a platform which replicates your actual exam. So the OT cases, the section A and section B, it's similar to what would come up in the exam, the platform and how it looks. At the end of each day, and guys, I want you to please pay attention. At the end of each day, when you go back after the webinar, you can access this platform. If you have internet, you should be able to access it. You can access this platform and you would have 1 or 2 questions from that day's topic that you can practice yourself. So that is sort of practice that you can do by yourself on a platform which looks like your actual exam as well. You must have received an email which gives you details on how to access that platform. If you registered by Friday last week, you would have already received that email. If you haven't registered or if you haven't received the email, I've written the address to access this over here. So it's acca.campusinsight.net. It should look something like this. I've taken a screenshot. You can sign up over here. It says sign up over there. You can sign up and you can access it. So for example, when we finish off the planning stage today, when you go back, you will be able to access 1 or 2 questions on risk that you can attempt for section B. So this is how we're going to go. Today is Monday. We're scheduled to finish the revision on Friday. On Saturday, you will have a mock, and that is amazing, guys, because once again, the Campus Insight is where your mock is going to be uploaded as well. So an entire 100-mark mock you can attempt within the allocated time, and this will be followed by a debrief on Saturday. So debrief is where we'll discuss the questions, or basically have an overview of the questions that were there. So this is what the plan is. If you have any questions up till now, please let me know. Like I said, I will be opening up the chat box. I do have Munazza with me. She's going to be helping me with the questions. She might be answering some of the questions herself as well. But right now, I'm opening up the chat box to see if you have any questions at all, guys. All right, let's see. Munazza, do you have any specific questions that I need to answer?
No, not yet.
Anything at all that I need to answer? Are we okay? The recordings, guys, those of you asking about the recordings are going to be uploaded, and you should have that information at the end of the session. So yes, each day's webinar is going to be uploaded on this website, and you should have information regarding that as well. You'll be getting emails for that information.
There's a student, Mehak. She asked if you could speak in Urdu.
I don't think, guys, if that's going to be possible. Munazza, can I be bilingual? I'm not allowed to be bilingual.
I guess you can.
I'll have to see. The idea is, guys, that we do have participants from outside Pakistan as well. And unfortunately, I don't know if that's going to be possible. I can confirm from ACCA. And until that confirmation is through, I will have to speak in English. I'm going to speak slower, by the way, right now, because we're just focusing on the introduction only. So I was sort of, hurrying up, really, so we could start the technical aspect. But let me ask, Munazza, can you confirm from ACCA, please?
Sure.
But I don't think, I'm pretty sure that's not possible. Anything else, guys? Is there anything else I need to look at? Are you okay to start, Munazza?
Yes.
All right, guys. So I do see there are about 60 participants. Guys, unfortunately, if you do not participate when I ask you questions, this is going to be a waste of time. So you need to listen, you need to pay attention, because we are focusing on techniques which are going to help you get through the F8 exam. So let's start. About the exam, and again, those of you who have taken F8 as the paper-based exam in December, you need to please pay attention, because this is going to be slightly different for your computer-based session. So you must know that from this year, the paper-based exam is not available in Pakistan anymore. If you're taking your F8 exam, you will have to take it as a computer-based session. So your F8 paper is slightly different from F5, 6, 7, and 9. It only has 2 sections. Section A is 30 marks, and section B is 70 marks. So now for these 30 marks, you're going to be given 3 10-mark case-based questions. So there'll be 3 mini scenarios, And for each scenario, there will be 5 objective test questions worth 2 marks each. So objective test questions could include multiple choice questions. It could include fill in the blanks. It could include drop down, multiple response, etc., etc. So 3 case studies, 3 mini case studies. From each case study, you'll have to answer 5 questions. This is very interesting, by the way. Your examiner has said that for each of these case study, the questions will be a mix of knowledge and application-based question. By the way, because when we met the examining team earlier this year, so scans went to the examiners conference, when we met them, we were specifically told that for each case study, there will be 2 knowledge-based questions and 3 application-based questions. So case study 1, which is what we called OT case, objective test case. OT case 1, small scenario, 2 questions which are based on your technical knowledge, nothing to do with the scenario, and 3 for which you'll have to use the scenario as well. For section B, there's going to be 1 30-mark question and there are going to be 2 20-mark questions, and each question will have a number of requirements. So the 30-mark question could have A, B, C, D. The 20-mark questions could have A, B, C, etc., etc. So this is what your paper format is. This is, by the way, exactly the same as the paper-based exam as well. Paper-based exam was also section A 30 marks and section B 70 marks. All right. Please remember, and this is particularly for the computer-based exams, the time allowed is 3 hours 20 minutes. So when you start your computer-based exam, the actual time for exam, this is not for the pre-exam instructions, by the way, guys. The pre-exam instructions, if you read them for say 10 minutes, that is not a part of your exam time. If you skip them, those 10 minutes are not added to your exam time. Please be very careful about this. So the 3 hours 20 minutes is your actual exam time. You must be aware that for your session CBs, the exam is going to be for 110 marks. 100 marks will contribute towards your result. The remaining 10 marks are seeded questions which will not be marked. In an exam, you will not know what the seeded questions are, but for F8, they will be in section A. So your section A will be actually for 40 marks. You'll be attempting all 40, but the marking will be done for 30 of those marks, and you will not know which of the 30 questions are being marked. So please be very careful that the examination time is 3 hours and 20 minutes. And so when you sit in your lab, any pre-exam instructions have separate time allocated. So that has nothing to do with the actual exam. Your examiner has been very specific about the common reasons for failure. So if you are a student who has been retaking the exam for a number of times, or even if you're taking it for the first time, these are the areas that you need to keep in mind. You could be failing because you're writing insufficient number of points. So for example, if you have 5 marks for an audit procedure on a certain area, then you need to write at least 5 procedures. If you're asked to identify 5 risks, then as a tutor, I would expect you to identify a minimum of 5 or maybe 1 or 2 extra so that the best 5 can be marked. So if you're not writing the relevant number of points, you might not get through the exam. If you're not explaining a comment in sufficient detail, you would not get through the exam. I'll talk about this for each of the areas of audit cycle, guys. But for example, for internal control, you can't simply write GDNs are not pre-numbered, they should be pre-numbered. That's not going to help you pass the exam. You'll have to explain the impact of GDNs not being pre-numbered. So for each area, be it risk, control, substantive review, opinion, if you're not explaining your point, you will not get marks. I'm hoping that by the end of the webinar on Friday, you should not be facing the third problem, but this is a common mistake. Students who've been continuously getting between 45 to 49, it is most probably because you do not know your audit procedures. Guys, please make sure you use the revision notes to prepare for your audit procedures. They are written in a language which is expected by the examiner, so you will be able to understand them much better. Again, if you don't understand the procedures or the audit process, it is very unlikely that you'll be able to get through the exam. So there's no point in rote learning stuff. If you're doing ratta or rote learning of your information, you will not get through the F8 exam. Please don't just copy paste whatever you've learned. Like I said, no point in rote learning anything. If you do not use the scenario, you're not getting marks. So make sure whatever procedures you're writing, whatever deficiencies you're identifying, they relate to the information given in the question. And if it is an incomplete paper, so students who do not attempt 100% of the paper, they are going to struggle in getting through the exams, guys. So your examiner has said that these are the 5 most common reasons for not being able to get through the F8 exam or struggling in repeated attempts to get through the F8 exam. I'm opening up the chat box before we start the technical revision, guys. All right, guys, let's see. If there are any questions, please let me know. Guys, please, those of you who are asking for the notes, they have been uploaded today as well. So you should be able to download them. So it should not really be a problem. Sheikh Saqib Hassan, yes. The answer is yes. You can use the revision notes and they should be enough for you. Of course, the assumption is that with those revision notes, you will have to attempt all the past questions. So attempt all the past exam questions, use the revision notes, and you're good to go. Guys, I cannot be bilingual. I've been told specifically that the webinar has to be entirely in English, so apologies. Yes, the slides, Akib, the slides will be uploaded at the end of every session. Hassan, the only way you can complete the paper is if you're well prepared. And well prepared means you should attempt all the past exam questions for a minimum of 7 past years. So 7 years papers need to be attempted. You will only run out of time if you're not well prepared. If you are well prepared, you should never run out of time. Of course, Zainab, just the basic points. F8 is not that simple that we can cover the entire syllabus in 5 days. So no, that's unfortunately only the main points. But the techniques, once we do the techniques, then you'll be fine. Neha, what question has Neha asked, Munazza? I've already asked the question before. Please reply. Can you ask? Neha, if you could please type in the question again. It is the whole of Muhammad Hanan. It covers the whole of F8. No, just don't read the book. The notes are enough, guys. I'm not going to answer this question again. This is the last time I'm answering the question. Notes along with past exams, and you can do this. Neha, no, not at all. Not at all. The computer-based exam is not more difficult than paper-based. It is exactly the same level. The only additional thing that you need to practice is your typing, which you can actually get the appropriate speed within a week. Sharyar, I don't think we should question this. I don't think that's what they've done. That's their headache. I have the answer, but I don't want to waste time giving that answer. If they are seeded questions, you have to attempt them. Unfortunately, let's not question them. That's like asking the examiner, why do you test risk in audit? So I can't do that. Guys, the platform access that you have given, the platform access, that is your answer to all your typing speed and everything questions. So attempt the questions that are there today for risk areas, and then that basically means that you will know if you can complete those questions in the allocated time. All of you guys who are talking about repeating the, so Neha and a few other people who failed the questions, again, focus on the techniques in the session, the techniques that we cover for each topic. I will talk about where you might be going wrong, and practice, please. And once you attempt the mock, so on Saturday, make sure on the platform you attempt the mock. That way you will know exactly where you're going wrong when we discuss this as well. So attempting the mock is also very important. Ramiz, no. There are no extra 10 minutes. The exam time is 3 hours 20 minutes. The total exam time is 3 hours and 20 minutes. Zainab, no, it does not make a difference. Zainab Yaqub, no, it does not make a difference. You can still attempt the mock. Noor Ahmed Nobeen, please remember there are no MCQs in, so there is no just objective test questions in F8. F8 has many case studies, and from those case studies you need to answer the questions. So the F8 is not like F5 and F7 and F9. It does not have only OTs as well. Yes, you won't be able to start the paper until the time starts. It is, yes. Shehani, absolutely, the mock is exactly the CBE format. Yes. Sheriar, both your combined result will come out on the scheduled result date. So you will not get the answers or your marks for your section A separately. Guys, I'm not going to talk about seeded questions. That's not really your headache right now, and it might be, but that's not relevant. Just remember, 3 hours, 20 minutes is your exam time. The extra 10 mark questions are not your headache. They are there. You have to attempt them. So in reality, your section A will have 40 marks of testing, and you will have to attempt it. I'm closing the chat box, guys, because I need to start the revision. So please don't worry about, I'm sorry if I sound abrupt. I don't mean to. The idea is, why should we question the allowed time, and why should we question the number of questions we have to attempt? We don't have a choice. So there's no point in having a discussion on the whys, because we have to do it. It is literally as simple as that, unfortunately. Guys, it is requested that when I'm revising the techniques, you listen to me instead of typing in the questions. Then I'll give you time to type in the questions, and then you can focus on that, right? So because we have to focus on techniques for each area, the important part is that you listen to me and ask me the technical questions when I let you do the typing in, okay? So guys, a basic overview that you need to be very clear on. Guys, it is a request that you stop typing the questions, please. You need to understand that audit is only one example of an assurance engagement. Please remember that an audit firm could be offering a number of assurance engagements. One of those examples is an audit that we focus on in F8. So the starting point is, you need to be very clear that an assurance engagement is any assignment which has 5 characteristics. There should be 3 parties involved: the one who is making the subject matter, the auditor or the practitioner or the firm who will be checking the subject matter, and the intended user for whom the report is being prepared. So responsible party is going to be making the subject matter, which the practitioner will check and make a report for the intended user. So an assurance assignment will always have three parties. It will always have something that needs to be verified. It will always have a suitable criteria against which the subject matter is verified or evaluated. So for example, you know how I said audit is an example of an assurance engagement? The practitioner is the audit firm. The responsible party are the board of directors. So they're the ones who are responsible for preparing the financial statements. So they are the ones who have prepared the financial statements. We are going to evaluate these financial statements against a reporting framework. So the idea is I'm going to put the financial statements in front of me. I'm going to match them to the relevant reporting framework to see if the financial statements are giving a true and fair view. I am going to gather evidence on whether the suitable criteria has been met or not. So as an auditor, I need to get evidence whether the financial statements are giving a true and fair view. And at the end, I have to prepare a report in which I give an audit opinion, and this report goes to the intended users, which are the shareholders. So the idea is, and this is what I always say, just remember that assurance engagement is an umbrella term. One example is audit of financial statements, and you could have assurance on any aspect. I could ask you to give me assurance on my internal control only. So my subject matter would then be internal control, for example. Also important for you to know that audit is a reasonable assurance engagement. So when I'm auditing financial statements, I'm going to be doing a lot of work, and at the end of the engagement, I will give a positive conclusion. In other words, I'll be giving my opinion regarding whether financial statements are true and fair, giving a true and fair view in material aspects. If I do not want reasonable assurance on the financial statements, I could also ask for limited assurance. So it's the same set of financial statements, but limited means I'm not going to be doing as much work. So there will be no going concern review. There might not be any internal control testing. I'm just going to be looking for obvious errors, and the conclusion that I give will be a negative conclusion. So subject matter could be the same, but the level of assurance changes the type of assurance engagement as well. Okay. So if I'm getting the same financial statements audited, it's a reasonable assurance engagement. If it's a simple review, it is a limited assurance engagement. So assurance engagements could be an audit of financial statements as well as a review of financial statements. Guys, I apologize for my horrendous writing. Unfortunately, I'm too old to change it now, so I'm really sorry. Again, as I mentioned, audit and review are all examples of assurance engagement. If I'm ever asked to differentiate between the two, there's an entire book I can write. In audit, the level of assurance is different, which means my conclusion wording would be different as well. In review, my level of assurance is different, and therefore the work that I do and my conclusion will be different as well. Firms could also be offering assignments where no assurance is given. Again, this is a topic which is not tested very frequently, but you should be aware of this. So they could also be offering agreed upon procedures. Apologies. Upon procedures, or they could also be offering compilation engagements. So let me put this simply. Assurance is someone else has done the work. I have to check it and give assurance. Assignments where no assurance is given means I'm actually doing the work. So I'm not being hired to check anything. I'm actually being hired to perform some work. If that area covers financial information compilation, if I'm asked to, for example, make the non-current asset register, or maybe do a reconciliation, or maybe prepare financial statements, it will be a compilation engagement. So a compilation engagement is where I'm asked to compile financial information. So not check it, actually compile it or make it. Agreed upon procedure could be any other work. So for example, I ask you to come into my office, sit, note down the waiting time for each customer, make a report and go back to your firm. I'm not asking for assurance. I'm asking you to perform a procedure that I've asked you to perform. So if I sum this up, if I just quickly sum this up, a firm or a practitioner, when you go on their website, they would say, we offer assurance engagements or we offer non-assurance engagements. When you click on the assurance tab, you could see, oh, we can do an audit or we could do a review of financial statements. I'm keeping the examples limited to F8 level. Of course, there's so many other types of assurance engagements. If when you click on the non-assurance tab, you could say, okay, do you want an agreed upon procedure or do you want a compilation engagement? So this is sort of the flowchart that you should sort of recall if a question comes in your exam regarding assurance and no assurance engagements. A quick introduction now. So from now onwards, our entire focus is going to be this. I won't be talking about review. I will not be talking about agreed upon procedures. I will not be talking about compilation engagements. I'm going to be focusing on how an audit is done. So this is basically what your external audit is. The technical term is independent audit of financial statements. Quick overview of the need of internal audit before we start the process. Guys, please remember, and this is important, when we talk about a public company is another name for a listed company. So for a public or a listed company, the shareholders are the ones who own the company. So they're the ones who've made the investment. However, majority of those shareholders are not the decision makers. So the company is run by the board of directors, and these are the board of directors who are responsible for preparing the year-end financial statements amongst a lot of other things. So they're responsible for compliance, for ethics, for all decision making, of course, but they're also responsible for preparing the financial statements. So for 2017, the financial statements that have been prepared, the responsibility lies with the board. Now, as a shareholder, I do not trust the directors. I have concerns that these financial statements might be manipulated. So the directors might be trying to hide what has actually happened in 2017. So there's a lack of trust. I'm concerned that the financial statements do not give a true and fair view. So I want an independent third party. When I say third party, that means it cannot be a director, it cannot be a shareholder, it has to be a third party. Someone, first is shareholder, second is board of directors, third is the auditor. So someone other than the auditors have to give an opinion, an independent opinion on whether they believe the financial statements are okay according to the reporting framework. So the idea is, from this slide onwards, you are this independent third party. Independent needs to be evaluated according to ACCA's and ISBA's code of ethics. You cannot have any personal interest at a senior level. You cannot have any financial interest other than the audit fee that you get, etc., etc. So from this second onwards, you are that third party, and the idea is you're going to be sort of reviewing the financial statements. So at the end on Friday, you can give an opinion on whether financial statements are okay or not according to your opinion. So what have we done up till now? Assurance and no assurance engagements are offered by audit firms. One of the example of an assurance engagement is external or independent audit. Independent audit can only be done by a third party, a person who cannot, or a firm who is not a shareholder or a director. And when I say audit, I'm simply checking whether the financial statements are okay according to the reporting framework. This is the idea behind the need of external audit. Guys, one last thing before I open up the chat box for questions. External audit is a legal requirement for listed companies. There is no question about that. For private companies, if your revenue or assets exceed a certain threshold, then you will also need to get an external audit done. Because we're doing the international version, you don't need to know the threshold because each country will have its own threshold. But please remember, it is mandatory for listed companies. It is also a legal requirement for private companies which are above a certain threshold. Any questions before we start the audit process, guys? Again, I'm opening up the chat box to see if we have any questions. Sarah, yes. For my external audit report, my report is for the shareholders. There is no question for that because my principal as an auditor is the shareholder. It is used by other users as well, but it is primarily for the shareholders. So as an auditor, I'm hired by the shareholders and I can be fired by the shareholders, and my report is for the shareholders. So please remember that. Sarah, I've already covered this, that in limited assurance, no, of course not. Negative conclusion does not mean this is not okay. Negative conclusion is a name for the type of wording that you use. For positive conclusion, you will say, in our opinion, this is okay or this is not okay. For a negative conclusion, the answer would be, nothing has come to our attention which will make us think this. So that's like me saying, in my opinion, F8 is easy, or me saying, I don't think F8 is difficult. So, I'm saying the same thing, but my level of assurance is different. No. Zainab Yaqub, no. For a reasonable assurance engagement, you need to get, for any assurance engagement, you need to get sufficient appropriate evidence. Danish, compilation engagement, the biggest example is preparing financial statements. So I'm not asking you to check financial statements, I'm asking you to prepare them. So compiling financial information. Compiling would mean putting it together. Exactly, Sarah. Limited assurance means I'm not doing as much work. I'm still looking for obvious problems, and I'll let you know if I find out obvious problems. But I'm not looking for them in depth. Let me just quickly go back and see if I've missed any question. Guys, please make sure that you restrict your questions to when I open the chat box so that I don't miss any of them, all right? Sakina Hussain at 10:23, yes. Even if you are not taking the computer-based exam, the mock, the technical aspect is still the same, guys. Ramiz, your wording is wrong. No, that's not how it is, unfortunately. Shahab, I've told you, preparing financial statements, conducting reconciliations, etc., etc. Zainab, no, this will have an impact on the opinion. If you can't get evidence, then this impacts your opinion. So because you've been hired, you still have to give an opinion. All right. I'm now, guys, closing the chat box, and I am now going to continue with the audit process. So what you have up over here is what we'll be covering in the next few days, starting today. We'll start off with factors that you need to consider when you obtain or accept new assignments. We'll go on to see how audit planning is done, how internal controls are evaluated, what substantive testing is, how you conduct a review, and ultimately how the audit report is given. So let's start, guys. And please think of this, no rote learning. Think of this as a very technical and so therefore a very easy topic. Suppose you're working for an audit firm. You need to understand that you could be obtaining or finding out about new clients through a variety of ways. So for example, maybe you submitted a tender. So company A was looking for tenders or quotations, and you submitted a tender, as a result of which you might be getting the assignment. Or maybe you advertise. So you are allowed to advertise, being very careful though. So maybe you advertise the fact that you offer external audit, and as a result, a potential client has contacted you. You might also be getting clients through referrals. So maybe another audit firm has referred you to maybe meet the directors and think about starting the external audit. Regardless of how you're getting the clients, there are a few factors that you need to consider before you accept a new client. I've clubbed them in a way which will make it easier for you to understand. So let's start. Evaluate to see if there's any indication that there are concerns about the reputation or integrity of your board of directors. If there are any concerns that the company or the directors are involved in illegal stuff, any concerns about their competence, for example, all of this will mean if before accepting the client, you find out that there are concerns about fraud or possible illegal activities, then maybe you should not accept this assignment, because there's a greater chance that if you don't find that problem, you could be facing a lawsuit as well. So any indications that the reputation or honesty, integrity of the director is under question, that's a factor that you need to consider before you decide. Any other indication regarding the level of risk attached. So for example, the potential client, I keep saying potential because I haven't become the auditor yet. Maybe the potential client is in an industry which is undergoing a recession. So when there's a recession in that industry, companies would be struggling. They might be near to being shut down, and they might try to hide this fact through manipulation. Another example, in the previous past, so in the previous times, they have been frequently changing their auditors. Why? Are they opinion shopping? Are they trying to find an auditor who will go according to them rather than the proper standards? Another indication that the level of risk attached to accepting this client is high. Another example could be maybe it's simply a listed company. Please remember that if you're auditing a listed company, they have a lot more requirements that you have to check compliance of. And therefore, you need to see if that level of risk is something that you're willing to accept. Keeping all of this in mind, you need to evaluate the audit fee that you are expected to charge. I'm not saying all risky clients should not be accepted. You need to balance this out. If you're okay in accepting a client which has a bad reputation, where there are indications of illegal activities or where the directors are not competent, if you're okay with accepting it, then make sure that you decide the basis of fee accordingly. Because if the risk is high, you'll have to conduct more work. You will be spending more time to make sure that you do end up getting sufficient appropriate evidence. So 3 factors related to the client that you need to keep in mind before you accept a new client. You will obviously be looking at the independence aspect. So for example, things like conflict of interest. If you are already auditing a competitor, maybe that is something that you'll have to consider, because you need to have appropriate safeguards in place before you accept this client. So all the information that you would have revised in ACCA's Code of Ethics and Conduct, that needs to be considered before you accept a new client. Do you have the competence to conduct the work? Again, this could be combined with this element as well. Maybe this potential client is in an industry that you have not audited before. So do you have the specialist skills or knowledge that is required to conduct the audit? Because we want to make sure that we stick to professional competence and due care. Your own resources are very important. Do you have sufficient staff available? Do you have time available to conduct this audit? So the potential client wants the audit to be completed in 1 week. Maybe you can do it if you have spare staff, spare human resource. So your availability of staff, the time, these needs to be considered before you decide whether you want to proceed with this client or not. Very, very important, you need to write a letter to the outgoing auditor. Please do not call it clearance. So your examiner does not like it when you use the word clearance. The idea is that with the client's permission, and this is the key, with the client's permission, you write to the previous auditor and you ask them if there's any ethical or professional reason why you should not accept the appointment. So the last auditor, I'm going to first take permission from the client, because otherwise they will not reply to me, the outgoing auditors. If the previous auditor gives me, if your client gives me permission, I'm going to contact the previous auditor and ask them, is there anything I should know? When the outgoing auditor replies, you have to evaluate their reply and then decide whether you should accept this client or not. So for example, maybe the outgoing auditor said, we're only leaving because we don't want to focus on audit anymore. We're focusing on consultancy now. No problem there. Or they could say, we're leaving because they were not able to, or they were not willing to increase their audit fee. Now that's a factor you need to consider. Whatever audit fee they're willing to pay, is that acceptable for your firm? If yes, go ahead. Then last but not the least, preconditions of an audit. And I want you to learn this as well. If there is any indication that the reporting framework that they are using is not acceptable or prescribed by law, then the precondition has not been met, and therefore you should not accept this audit. So the first precondition is the reporting framework should be acceptable and it should be prescribed by local law. The management should acknowledge that it is their responsibility to prepare financial statements. It is their responsibility to have a sound system of internal control. And they need to give me access to all relevant information for the preparation of financial statements. If before accepting an audit, there is any indication that the reporting framework is not okay, or the management believes that you have to prepare financial statements, or the management will restrict your access to information for audit, then the precondition has not been met, and therefore you should just literally not accept the assignment at all. So the idea is, and this is, so you should remember in an exam, that Afaf said, when you're accepting new clients, there are 9 areas that I need to keep in mind. Reputation, integrity of directors, any factor which increases the risk of fraud and error in the financial statements that I find out now before accepting the client, the fee that I'm going to charge, a point you need to consider. Is there any independence issue? Do I have the competence, knowledge, expertise to conduct the audit? Do I have the resources to conduct the audit? What has the outgoing auditor replied in the professional etiquette letter? Have the preconditions of an audit been met? If you've considered these 9 areas, you are now ready to sign the engagement letter. Please remember, and I want you to pay attention, guys, please stop typing in the answers. Please remember a few things. Engagement letter is sort of the legal contract between the client and the auditors. A few things before we go on to the contents. Remember, each new audit, so if it's a new audit, you need to have an engagement letter. You cannot start your audit before an engagement letter. For recurring audits, so recurring means this is my 2nd or 3rd year as an auditor, you do not need a new one. So you do not need a new engagement letter. However, you have to conduct a review to see if any changes to the existing engagement letter need to be made. If along with audit, you are offering other assignments as well, then each assignment will have a separate engagement letter. So this contract that I'm making, this is restricted to the audit of financial statements, which is one type of assurance engagement. It will be done, it will be made for every new audit assignment. If it's a recurring assignment, you don't need a new one, but it has to be reviewed on an annual basis to see if any changes need to be made. The contents of this engagement letter you need to learn. A few examples. You will specify the purpose and the scope of audit, including the local legislation's effect on scope. So objective is to give an opinion. Scope means I will give an opinion on the financial statements. They're in my scope. If the local law adds something else to your scope, then you'll have to keep that in mind and keep in mind as well. You have to explain the responsibilities of the auditor as well as the management. So in this contract, let's just clarify the responsibilities. Explain or clarify the reporting framework that you've been told has been used. Any reports that are going to be issued throughout the audit, form and content needs to be detailed over here. All arrangements regarding planning and performance, including how the audit team will be made, this needs to be mentioned in this contract. Instead of mentioning a fixed fee, it is recommended that the basis of the audit fee is mentioned over here. And then ultimately a request for the client's management to sign this letter. So this is their acknowledgement that they're okay with the above contents as well. Also, please remember what I spoke about earlier. So you know how I said, if I quickly go back, you know how I said for recurring audits, you'll have to review if the engagement letter or the contract has to be changed. These are certain examples. If there's any indication that the client has misunderstood the objective or scope, instead of reasonable assurance, they thought we were giving 100% guarantee. If there's any misunderstanding on the fact that we only give an opinion on financial statements, then maybe it needs to be clarified and review and change the engagement letter. Maybe the terms of engagement have changed. Maybe the basis of fee has changed. if there's been a recent change in the management or ownership of the client, if the regulatory requirements have changed, or maybe the reporting framework has now changed. So if there are any indications that some of these contents have changed, then you will need to review the contract that was initially signed and then maybe make a new or amended engagement letter. So if I go over here, before accepting a new assignment, there are 9 areas that you need to consider. Once you are happy with those 9 areas, you sign a contract called engagement letter, which is your formal acceptance of that engagement. Any questions regarding what we've done up till now only? So guys, I will not be answering any questions regarding what we've done before this, because we obviously have to keep in mind that we have limited time. We need to work within the time allocated. I will now open up the chat box and only answer questions which relate to obtaining, accepting, continuing audit engagements. Any other questions will not be answered at this point in time. So you have time now. So Serish, yes, you can advertise that. So as an audit firm, you can advertise that you offer audit. If you go for P7, you will study that there are certain guidelines that ACCA has given you to keep in mind. So you can't lie in your ads, no exaggeration, etc. But you are allowed to advertise, yes. Audit framework and reporting framework. Reporting framework is the basis on which your financial statements are prepared. So your financial reporting standards. Audit framework is the way you conduct your audit. So your auditing standards. So Amjad, the answer to your question is audit framework means auditing standards. Reporting framework would mean IFRS and accounting standards. So guys, are you okay? From now onwards in an exam, if it's about obtaining, accepting, continuing, there are 9 areas which you need to consider along with the engagement letter. SN, this is not a relevant question. All right. Of course, Shahab, when you say cost basically means when I'm setting the audit fee, you have to decide how much you need to charge by looking at obviously the cost and the profit element that you want to add to it. Sometimes I could be accepting an assignment which is at a loss simply because I want the client's name on my website or on my list. So of course, it's like pricing any product or any service. So cost is considered in external audit fee. Guys, can I quickly clarify that you do not need to learn the names or the wordings or the numbers of your auditing standards, all right? Yes, Sharia, yes. Preconditions of an audit are set by your auditing standards. So whichever company, be it listed or private, if they're using the auditing standards, then the preconditions will have to be met. Yes. Neha, their notes have been uploaded. If you cannot access them, Munazza will help you in the relevant email address. Guys, are we happy to move on to the next stage? So I'm hoping that you will be able to answer all questions relating to obtaining, accepting, continuing. I have one yes. Can I have a few more so I know we're happy to proceed? Okay, good. So I just want to make sure no one else is typing in their questions. Bless you guys. Thank you. Let's move on. Now we go to the difficult portion. So I want all of you to be awake and paying attention. So the idea is, as an audit firm, Maybe I submitted a tender, maybe I advertised, maybe it was a referral, it doesn't matter. Ultimately, I have now accepted the assignment. So I've signed the engagement letter. I'm officially this client's auditor. Okay? The first stage of work that comes up is audit planning. The minute you see audit planning, guys, before I go on to the technical area, I'm going to tell you an easy summary. The minute you start audit planning, the first thing I have to do, and I'll make this simpler, is gain an understanding of the client. So it doesn't matter whether you're auditing a bank or an educational institute or a manufacturing company, it doesn't matter. The very first task that you have is find out what the client does. Everything and anything about the client. Where the money comes from, what their work is, what their policies are, who are their main stakeholders, everything has to be understood. Based on that understanding, I am going to find out the areas in the financial statement which have a higher chance of fraud or error. I'm not teaching you F8 right now, guys. Please remember, I'm not teaching you F8. I'm telling you a story. You're not an F8 student. You are an engineer who's just listening to my story. So the first thing you did was understand what this company is all about. Then you ran back to your room and you said, okay, based on this understanding, these areas of financial statement have a higher chance of fraud and error. So when I was getting an understanding, someone told me they give profit-linked bonuses. My concern is there's a higher chance that profit could be overstated so that people could get their bonuses. When I was gaining the understanding, they told me they have a lawsuit which has been filed and decision has not been taken. I run back to my room and say, oh my God, provision or contingent liability disclosure, what's going to happen? When I was getting an understanding, they told me during the year, they have a new accounting system. I ran back to my room and chances of errors. So the idea is you gain an understanding, not because you're wasting your time, but because based on that understanding, I want to find out which areas of financial statements have higher chances of problems. Once I've done that, I need to decide, am I going to cry about every small problem or maybe set an amount of materiality? So I will decide the materiality level. As an auditor, I'm not looking for every 1 rupee or $1 problem. I'm looking on whether financial statements give a true and fair view in material aspects. So now today is the time when I need to decide what for me is materiality. I'll do something else which is blah blah, we'll do that later. Once I've done all of this, I haven't started F8 yet, guys. Once I've understood what my client did or does, once I understood which areas of financial statements are at a higher risk of fraud and error, once I know what for me materiality is or which areas are important, then I am ready for detailed planning. So I know provision is a risky area. So let's plan what are we going to do. I can't just say, oh my God, provision is risky. Let's go cry about it, right? I need to make a plan. So step by step, the detailed work that I'm going to do and who's going to do that work. So and by the way, this on the screen is the entire audit planning stage. So the minute you see a question on audit planning, guys, I want you to pay attention. Audit planning is not only risk. Your examiner says students think that audit planning is only risky areas. No. Audit planning is a complete stage which is very important. You understand, you find the risky areas, you're determining your materiality, you're planning detailed procedures. All of that comes under audit planning. So we're now starting F8 officially. Once I've obtained or understood the clients, guys, it is requested that you do not type in questions. Please listen so that you understand the strategy, right? So once you've obtained the understanding and signed the engagement letter, you need to, like I discussed, number one, make the audit strategy. Number two, simultaneously or bit afterwards, make the audit plan. Audit strategy has 4 components. You need to learn this as well, guys. You need to understand the client. You need to find the risk. You need to determine materiality and determine scope, timing, and direction. Once all of that has been done, the detailed implementation and procedures come under audit plan. We're going to take this one by one. Let's start with this. So the very first thing I have to do is obtain understanding, and you need to learn this, guys. So your auditing standards, I'm not talking about accounting standards, I'm talking about your auditing standards. Your auditing standards are very nice to you. They've made your life much simpler. They've said you need to gain an understanding about these 5 areas. Understand the industry that the client operates in, the laws and regulations that apply to this business, any other external factors that apply, the nature of the entity and its accounting policies. Is this an individual company or a group? What accounting policies do they use? How do they recognize their revenue, etc.? What are the objectives of this client? What strategies have they made to achieve these objectives? And according to them, what are the business risks? So this is not your risk assessment, guys. You need to find out, according to them, what are the business risks that they believe they're facing. How is their performance reviewed? So which performance indicators are more important for them? This is important, guys. Is their performance evaluated on the basis of revenue? Then that would mean revenue is more important for me or more risky. Or maybe it is the gross profit which they base their performance reviews on. Understand their entire internal control now. This includes, guys, you need to understand their control environment, which is the senior management and their integrity and competence. You need to understand how they carry out their risk assessment. You need to understand what control activities they have in place already, whatever controls they have in place. You need to understand how they ensure that information is of the right quality and it is communicated to appropriate levels. And you need to understand how they monitor their internal control. Guys, internal control is just a very fancy way of saying systems, the way they do things. So when I say understand the internal control, it's a lot of work that you have to do. You have to focus on how they prepare their financial statements, the systems that they have in place. Do they have authorization controls? Do they have physical? So you're only understanding it right now. You're not testing it. At this stage, you're only understanding the internal control that they have in place. Where can you get this understanding from? There's so many answers. You could be looking at last year's financial statements, particularly the accounting policies you can find out from there. You could be carrying out discussions with previous auditors. You could be looking at last year's reports to management. You could be looking at the client's own policy manuals. You could be simply discussing this with the management, looking at their minutes of the board meetings. You could be looking at this year's accounts and management accounts and budgets. You can have a look at the client's website. You can get industry information from competitors' financial statements. So if I go back, the first thing you need to be prepared for is you need to learn what areas do I need to get understanding about and where can I get that understanding from. So guys, what have I done up till now? I'll open up the chat box in just 1 second. I have started my work officially after signing the engagement letter. The first work that I have to do is up on your screen right now. I've told you these are the 5 areas you need to get an understanding about, and I've told you where you can get this understanding from. Please remember, based on this understanding, keeping in mind all the stories I've been told, I have to find out the risky areas. So any questions regarding this? I'm opening up the chat box for just a minute or two. I want to make sure I take each step as we go. All right. Let me just go back. Tareem has asked a question. Tareem, to attempt any question in F8, the main points that I told you have to be kept in mind. Your preparation should come from the revision notes that I've sent you guys. So absolutely, this is the entire planning stage. Nothing else beyond this is done. But the expansion of these points needs to be prepared from your revision notes. It's only 120 something pages of the entire F8 syllabus. Huh? Neha, I think Neha, your answer will be, question will be answered when we go further a bit. Yes, Akib Muhammad Saeed has a very good question. Does the client have to provide all the documents? Absolutely yes. If they don't, this is a precondition of an audit. If they don't, we talk to the audit committee. If I still don't get the information, that my opinion will be affected. Muhammad Danish, I have not explained materiality. Guys, I gave you an overview of the entire audit process. Now I'm taking it one by one. Rashid Rafiq, yes. Absolutely yes. Oh, okay. It's 178 pages, not 120. My bad. I apologize. But it has a lot of techniques in it as well. Come on, guys. Yes. No. Sakina Hussain, understanding is a part of the planning stage. Planning stage comes after accepting the assignment. Yes, Zainab. Yes. The very first, listen guys, what I did was I gave you an overview of the entire work I have to do, and then now I've divided it step by step. So the very first time after I've signed the engagement letter, the very first thing I have to do is get an understanding, and I've told you what understanding you have to get and where from. Let me just read Ramiz's question. Ramiz, anything that is relevant to financial statements, I will ask them for it. If they don't give it to me, my opinion will be affected. Whatever dark side that they believe they have, they still have to tell me, unfortunately. Ibrahim, video recordings will be uploaded every day. Yes, they'll have to show me the budgets as well. Yes, Tehreem. Once you've accepted the assignment, then I'll gain an understanding based on the process that I've just explained. Sakina, this is something that we should have considered before I accepted it. If it's an industry that you're not comfortable with, Sakina, this is very logical. If you're accepting a client, you obviously know which industry they work in. So you should automatically know whether you're comfortable with that industry or not. Rashid, we don't know if the internal controls are weak right now. Right now, I've only understood how they do things. I've not tested them. But based on your understanding, if you think they don't have controls, so unke paas systems hai hi nahi, just one Urdu line. So if you, Rashid, if you think they don't have systems to begin with, then no, you still go ahead and you will just increase your substantive testing. You will not cancel the letter engagement. You will just increase your substantive testing. So guys, come on. Let's stick to the sequence. The first thing I did was, after signing the engagement letter, I'm minimizing the chat box now. The first thing I did was understand what my client is all about. So suppose you were auditing scans, you need to understand the industry, the accounting policies, our objectives, our performance indicators, and the way we do things. When I say understand, you're simply writing down whatever you're finding out. Based on this understanding, now comes the technical area. You need to find audit risk. Now, guys, there's a knowledge portion for this and there's an application portion for this. So let's do the knowledge portion first. In the simplest of words, audit risk is the risk that I might give an inappropriate opinion when the financial statements are materially misstated. So in other words, audit risk is the risk कि कहीं मैं गलत opinion ना दे दूं. So maybe the financial statements were misstated and instead of finding that, I said, oh no, everything is okay. So at the planning stage, after the understanding has been gained, you have to evaluate what are the chances that you might give an incorrect opinion. The chances that you might give an incorrect opinion has two factors which affect these chances. The first one is maybe there's a problem in the financial statements. The second one is maybe I will make a mistake. Let's be very clear. First element is that maybe the financial statements made by the client are incorrect because there is high inherent risk. Inherent risk could be in the nature of the industry that the company is operating in, or in the nature of the amount or disclosure that you're auditing. So for example, accounting estimates are inherently risky. I'm not blaming scans for it, but because accounting estimates include judgment, there's an inherent risk that they might be misstated. Similarly, financial statements could also be misstated because the systems or the controls that this client has are weak. So as an auditor, I could give an inappropriate opinion because maybe the financial statements are wrong. No fault of mine. This is not my fault. It's because maybe they're highly inherently risky, or maybe the client systems are wrong. I could also be giving an incorrect opinion if the auditor is not able to find material fraud or error. So this time, detection risk has nothing to do what the problems in the financial statements are. It's about my inability to detect problem. So in simple English, let's go to engineering or doctor or non-accountant language. Audit risk is maybe I will give the wrong opinion. I could give the wrong opinion because of high inherent or control risk. This is not my headache. It's because either the systems of the client were weak or because those areas are inherently problematic. I could also be giving a wrong opinion because maybe I might not be able to find the fraud or error. So detection risk is entirely the auditor's headache. Maybe I have, for example, my detection risk would be high if I have unskilled or incompetent team. My detection risk could be high if I do not know how to select a sample. My detection risk could be high if I do not know how to apply the right procedures. My detection risk could be high if I'm not applying professional skepticism. So if I simplify this for you, audit risk is the risk that I might give an incorrect opinion. I could give an incorrect opinion because of inherent or control risk, or I could give an incorrect opinion due to detection risk. Inherent and control risk is called risk of material misstatement. This is not up to the auditor, it is just there. I could also give an incorrect opinion because of the chances that as an auditor, I might not be able to detect material fraud and error. A very, very important portion. If you remember, guys, this is combined called risk of material misstatement in financial statements. So let me just quickly change the color of the pen because it's so of course it's obvious. My risk of incorrect opinion has to be kept low. It can only be kept low if I manage the components. If the inherent risk is high, if the control risk is high, then I have no option but to reduce detection risk. So when you came to audit scans, right, you said, okay, Afaf, I'm concerned that you have a lot of accounting estimates. I'm concerned that you give performance-linked bonuses. So because of that, the inherent risk is high. I'm also concerned that you seem to have no systems. When I was understanding the systems, there are no systems in place. So you don't have a proper way of doing this. So there's a high control risk, there's a high inherent risk, which increases the chances of fraud or error in the financial statements. So if inherent and control risks are high, I need to make sure I manage my detection risk. How can I do that? I can make sure, for example, that I'm using more experienced audit staff. I can make sure, for example, I am selecting the proper sample. So maybe my sample selection needs to be sorted out. I need to make sure I'm exercising proper professional skepticism. I need to make sure I have the right audit procedures that I'm performing. So if I go back, guys, just give me a second. Right, guys. So if I go back over here, back to my slide over here. Okay, I have gained the understanding and I know, or I need to document the audit risk. How do I document the audit risk? Audit risk is the risk that I might give an incorrect opinion. This constitutes of risk of material misstatement as well as detection risk. If my risk of material misstatement is high, I will need to reduce the detection risk by having appropriate staff, etc., etc. So this is the knowledge portion of audit risk. I haven't spoken about how this will come up in an F8 exam. I need to know if you're okay with the knowledge portion. You should know what audit risk is. You should know what risk of material misstatement is. You should know what detection risk is. You should also know the relationship. If risk of material misstatement is high, then detection risk has to be low. This relationship needs to be very, very clear when you're doing your knowledge preparation. I'm opening up the chat box to see if you have any questions regarding the knowledge portion. So definitions and understanding. Please don't ask me how this comes up in the exam because I'm going to do that just now. Sarah, inherent risk is the, oh, no need. Okay. Thank you. Okay. Oh, control risk could be any problem. So for example, when you came to scans, we don't have a GDN. We don't have a sales order. We don't have an invoice. Everything is done verbally on the phone. So the risk that you do not actually have systems in place. So the logic is, if you don't have systems for preparing financial statements, then basically the financial statements will have lots of problems. Dekho, again, just 1 second, Manazar Urdu. जिस तरीके से financial statements बन रही हैं, वो तरीका ही सही नहीं है. So the way the financial statements were supposed to be made, you don't have a system in place. You're randomly picking up the amounts and putting them in the sales ledger. So control risk is you don't have systems in place. The client does not have systems in place which could prevent or detect fraud or error. Yes, Tehreem, that's right. Absolutely right. 1125, Tehreem is right. So guys, one portion is this. So be very well prepared that after understanding, I have to evaluate audit risk and understand the portions or the components of audit risk, etc., etc. Yes, Zainab, that's correct. Tehreem, no. Audit strategy has 4 elements. We've done only the 2 right now. We have understood the client and we've evaluated audit risk. We will now cover the remaining 2. We have not tested the controls yet. The only problem I have is with your last word. We have understood the internal control, but we have not tested the internal control yet. Sakina, there are lots of examples in your knowledge summary other than the ones I've given. So I've given you a few examples. There are lots more in your revision notes as well. Yes, you will be getting the slides at the end of the session. You will get the slides with my amazing handwriting on it. So you can have all of that. All right, guys, I'm minimizing the chat box. I'll be opening it in the next minute or so again. Now let's see how this question is tested in the exams. Now, please remember, and before I go on to the exam testing, please remember that I'm focusing on the risk of material misstatement. So remember, AR is equal to risk of material misstatement and detection risk. I'm only focusing on the risk of material misstatement right now. One way of finding out the risks was based on the understanding, right? So you told me you give profit-linked bonuses. I found out the risks. You told me you have a lawsuit outstanding. I found out the risk. So some maybe 20 risks I found out based on the understanding that I gained. In addition to this, I need to find more risks by conducting something called analytical procedures. Guys, analytical procedures is just a very fancy way of saying comparisons. this is very interesting and very logical. So you're auditing the financial statements for the year ended 31st December 2017. Okay. In the financial statements, the revenue has been recorded at $1 million. So this is a story I'm telling you. Last year, in December 2017, the revenue was maybe 0.5 million. And in 2017, the industry underwent recession. So this is the story that I've told you. December 16 sales are 0.5 million. They've gone up to 1 million in a year when there was recession. You've compared current year sales with last year. Can someone tell me what the risk is? So what suspicion is coming to your mind? Guys, what suspicion is? Overstatement of profit because overstatement of sales? Absolutely yes. So simply by comparing current year with last year, I'm not sure, it's still a risk. I think sales are overstated because this is not making sense to me. So what have I done? Current year sales were compared with last year and with some information from the industry. I'm not stopping right now. For December 7, I reviewed the client's budget. So for the same year, you know how the client would be making their budget as well? When I opened their budget, their sales budget was 0.6 million. Now my suspicion has gone up even further. Last year was 0.5 million. 2017 faced a recession. Your own budget said 0.6 million. So, sir, where did this 1 million come from? So, by comparing this one figure with last year, with industry, with budgets, I now have my suspicion or risk that sales could be overstated. You could do these comparisons and more comparisons for all areas of financial statements. Comparison with last year, comparison with all of that can be done for sales, purchases, inventory, property, plant and equipment. Most of these areas, some of these comparisons can be done. So what are analytical procedures? Simple version, they are comparisons. This is the technical version. This is when you evaluate financial information by analyzing plausible relationship. Audio connection lost? It says audio connection lost. Okay, all right. So when I say plausible relationships, I'm talking about areas which are expected to have a relationship, right? So for example, non-current assets, property, plant and equipment, and depreciation, they're expected to have a relationship. Sales and sales commission, it's expected to have a relationship. So you only evaluate information where there are plausible relationships amongst both financial and non-financial data. Examples, some of these I've done. You compare with last year. You can compare with the same year's budgets and forecasts. You can compare with similar industry information. Very interesting. You could compare with your own rough working. So for my sales, simple units in the entire year multiplied by average selling price, it is coming up to, no, that's too much, 0.65 million. I asked the client for the number of units. I asked for the average selling price. When I multiplied the two, it was coming up to 0.65 million. How come you've recorded 1 million? So you could be doing your own rough calculations. You could be, again, comparing it to non-financial information, right? So number of employees compared with your payroll expense, etc., etc. So in reality, I could be finding out the risky areas through the understanding that I've gained, as well as through the comparisons that I'm doing. These comparisons will give me more risky areas, and they are called analytical procedures. Please remember, right now I'm at the planning stage. So right now, I am only doing these comparisons to find out the risky areas. I will do the same comparisons later, but the purpose would be different. Right now, this is for risky areas only. In F8, you are expected to calculate certain ratios, and you should be able to comment on those ratios as well. So this year's ratio compared with last year, and comment to see if you think it is under or overstated. Guys, I'm now going to do a small activity. Now I'm going to focus on F8, how this comes up in an F8 exam. You will be given information, okay? So information will be given, and you will be asked to find out audit risk, which could include risk of material misstatement as well as detection risks. I'm going to do a technique with you for 1 or 2 examples, and the rest I will ask you. I'm starting with the first one. In this scenario, I'm given a small or maybe a few lines of information. Now listen to this very carefully. I have been told that my inventory is, so my closing inventory is valued at 5 million. 4 million of this inventory, so this is all in the scenario, guys, okay? 4 million of this inventory is in my own warehouse. The remaining 1 million is at a rented warehouse with the third party in another city, for example. So I only have an office in this city, maybe in another city, another location. So this is the information that I tell you, the understanding that you have gained, that some inventory is in my own warehouse, but there is some inventory which is with a third party. The minute I get this understanding, I run back to my little office and I start thinking. My first concern is, does this inventory actually exist? So this 1 million inventory, are you sure it even exists? That's my first concern. My second concern is, even if it exists, are you sure it belongs to the client? So it could have a physical existence, but is it actually the client's inventory? Even if it belongs to the client, what is the condition of this inventory? Maybe it is damaged. Maybe it is obsolete. All of this is giving me an indication that my inventory could be overstated by 1 million. So the minute I find out that they have inventory at a third party, the risk is, this is how you'll write it. The risk is that inventory could be overstated because it might not actually exist. It might not be owned by the client, or maybe the condition might not be appropriate, and therefore it might not be valued at the lower of cost and NRV. Please remember, my condition has an impact on my valuation of cost and NRV. So as an auditor, understanding was only this one line, but based on that understanding, I'm telling you that there's an area of financial statement which is at a risk of overstatement. I'll do one more with you and then I'll start asking. I was also told that they have a current long-term loan. So it's not as if they're trying to get it, they have it. So on their SOFP, they have a long-term loan, the balance of which is 20 million as at 31st December. So as at 31st December, this is the balance that they have as their long-term loan. So many risks I can find out from here. Let's see. Let's start with the easy one. I am concerned that the finance cost might be incorrectly calculated. So if or when you do F7, you would know that finance cost cannot be recorded as simply the amount multiplied by the interest rate, okay? There's a concept called effective interest rate that you'll study in F7. I don't need to know that for F8 at all. But simple language, one word, one line. The risk is that maybe the finance cost or the interest element of this loan has been incorrectly calculated. I am concerned that the split between current and non-current liability is incorrect. So remember, the portion of 20 million which is due in the next 1 year has to be classified as current liability. So my concern is maybe they haven't done that split. So it won't have a numerical impact, but I'm talking about the presentation, right? I am concerned that maybe there's a loan covenant, which means a condition. Maybe that condition has been breached, which could have an impact on financial statements. Guys, remember, and this is something you're expected to know in detail, that impact of breach could be a fine or a penalty. It could also mean you have to repay the entire loan immediately. So I am concerned, has the appropriate provision been calculated, or maybe this will have an impact on my going concern as well. So simply by having a loan covenant, I have suspicion or risk that maybe it has been breached, the impact of which might not have been recorded on the financial statements. I'm concerned that maybe there are assets which have been held as a collateral or security for which a disclosure in financial statements is missing. Again, this is your accounting standard, guys. If you have assets which have been held as security, you need to mention that as a disclosure in the financial statements. And I am concerned that disclosure requirements regarding the loan have not been met. So IFRS 7 and 9, they give you disclosure requirements. You don't need to know the requirements for F8, but the risk is that maybe those disclosure requirements have not been met, and therefore disclosures or notes are inadequate or incomplete. Ladies and gentlemen, this up on your screen, you have 5 different risks. So, you know, sometimes you have to identify and discuss 5 risks. From this one word long-term loan, you can actually write down 5 different risks. So the idea is, and I want you to pay attention, guys, when I was understanding the client, I was told, oh, by the way, I have a long-term loan. That's really it. The minute I was told there's a long-term loan, I ran back to my office and I found out these 5 risks, because either I'm a good auditor or I've done my F8 pass exams. So how do I know these are the risks? Through my F8 pass exams. Any questions regarding inventory at third party or long-term loans? Because now you will have to tell me the answers to all the rest of my examples. If you have any questions regarding these or analytical procedures, I'm opening up the chat box, guys. Disclosure is another name for your notes to the accounts. So the risk is that any asset that you have held as security, guys, this is your F3 knowledge. If there's an asset that you held, so I went to Royal Bank of Scotland, I asked for a loan, they said, sure, you need to give me your building as a security. So my building has been kept as a security. So your accounting standards say that that has to be disclosed in the notes to the accounts. If the covenant has been breached, Sarah, I've explained it. I might have to pay a fine. If I go back, it should be there. There you go. If it's a fine, the impact is a provision that you might have to book. Or if it's a repayment, then you might not be a going concern, for which you might need another disclosure. I've also answered 1143. Plausible means any two items which are expected to have a relationship. So Sarah, for example, I'll give you a high level example. I cannot compare research expenditure with last year, because maybe last year I had a budget of 20 million, this year I had a budget of only 1 million. So there's no plausible relationship with last year information, but there's a relationship with the budget for this year. So I'm saying you can't randomly compare everything with last year. You can't randomly compare everything with industry information. It should be expected to have some sort of relationship. Serish, we find the risk and later we will plan procedures for this. So of course it is linked. Right now, I'm only finding out the chances of fraud and error. Later on, I will plan procedures for these risky areas. Erbaz, yes. You can write that in the rented warehouse as well. Yes. Tehreem, this is accounting. Guys, I can't revise your accounting with you. We won't have time for audit left then. However, I will tell you that this is a reporting requirement, that if you have an asset which you have kept as a collateral or security against a loan, then in notes to the accounts, which is your disclosure, you have to explain that. So when you say I own a building, then add a note to say I own it, but it's with the bank as a security. Yes. Vasanta, absolutely yes. But guys, please, Vasanta, please remember, each risk impacts a different area. So my loan on, so my risks on long-term loan, the first risk has an impact on an expense in P&L. The second risk has an impact on the presentation in the SOFP. The third risk has an impact on either a provision or the entire set of financial statements. Fourth and fifth are separate disclosures. So absolutely yes. Each risk is having an impact on a different areas. Yes, Zainab, pretty much yes. I don't agree with the first line, made by management. These risks are just there. They're not made. The poor management hasn't made them. The risks are there and we have to find them. Muzammil, yes, that is correct. Yes. Vasanta, absolutely yes, because every risk has to impact a different class of transaction or a different account balance or a different disclosure. Guys, I'm assuming you know what a class of transaction is. I'm assuming you know what an account balance is. I'm assuming you know what a disclosure is. Class of transaction is for P&L items. Account balance is for SOFP items, and disclosure is for notes to the accounts. All right, guys, thank you so much. I'm minimizing the box now. Now is the time to wake up. Come on, start. Guys, by the way, all these examples are extracted from the past exams. So I need you to tell me. In the question, I've written that a lawsuit was filed by a customer who slipped and hurt himself at my shop. The decision has not yet been made. Could you tell me the risk? All of you who are asking about a very weird term called risk response, I'm not answering you because I haven't taught you the response yet. So I'm ignoring you intentionally. Come on, guys. A lawsuit which is outstanding, that's all I told you. All of you have written provision and only Sakina is the one who is covering both parts to it. Guys, pay attention. If you are repeaters, this is giving me an indication that you have not prepared through your past exam questions. Guys, please think like accountants. If a lawsuit is pending, you do not automatically say provision, 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 provision. You're accountants. You'll have to see if it is probable that we will lose the lawsuit, then the risk is that a provision might need to be made and that provision might be understated. However, if it is only possible that we might lose the lawsuit, then we just need a contingent liability disclosure. The risk is that this disclosure could either be completely missing or it could be inadequate. So you will not get marks until you tell me whether something is under, overstated, or inadequate or missing. As an accountant, as an auditor, if I tell you there's a lawsuit pending, you will not run and make a provision, guys, because then I will fire you from your job. You will first have to find out whether there's a probable outflow or a possible outflow, or maybe there's just a remote chance, in which case nothing is needed. So those of you who quickly jump to provision, I'm not giving you marks. You'll have to explain the proper trend. The risk is if it is probable that we might lose the lawsuit, then a provision is needed, which could be understated. If it's possible, a disclosure is needed, and the risk is that that disclosure could either be completely missing or inadequate. Is there something that I need to look at, or can move on to the next one? I think move on to the next one, right? All right, guys, the next one. Come on. All I told you was on my balance sheet, on my SOFP, there's a development expenditure that I've capitalized for 5 million. I'm opening up the chat box. I need answers, guys. It's a material purchase, should see the breakup according to, I don't like these, that's not the risk. Should see breakup is not a risk. I want you to give me the answer. The risk is what? What's the risk? Come on, guys. I want you to give me the answer. If you want to pass F8, you can't just give me random points. Yes, yes. Vasantha has the right. Absolutely yes, guys. Okay. Okay, guys, stop typing. Again, indication that most of you have not really done the past exams. Within this, there are two main risks. Absolutely right. Most of you gave the first risk. The risk is that this might not meet the criteria of IS 38, and therefore assets could be overstated. So you're absolutely right that research expenditure might have been incorrectly capitalized, and therefore your assets are overstated. I want you to pay attention, guys. Listen, you said your first concern is, should it even be there? Which is fine, you covered it. My second concern is, even if it is meant to be there, maybe you can talk about the amortization. So the idea is, if the criteria has been met, you're concerned that amortization could be incorrect, again, which means your liability could be understated or your asset could be overstated. If you're not amortizing it, then again, your development expenditure is overstated. So there are two separate risks. Most of you got this right. As long as you word it correctly, it will count as a risk. There's no question there. Okay, what about the next one? You were working on the financial statements and you were told, oh, by the way, payroll expense, we've not calculated it. This was outsourced. What's the risk, guys? Understatement, overstatement, or misstatement? Neha, if you write both for development expenditure, there are two separate risks. Misstatement. Very well done, Aneeb. Very well done, all of you. Outsourcing means I have concerns about errors. If you write only understatement, only overstatement, that's a 0 mark. So my concern is, because part of this has been calculated by another firm, I don't know how competent they are, how good their internal control is. Therefore, I'm concerned that their payroll expense could be misstated. Those of you who are asking me about IS 38 criteria, unfortunately, you'll have to revise your accounting knowledge, guys. All right, I have purchased a brand or a license for 20 million. Please tell me the risks. Quickly, guys. Any one person. Anyone. Goodwill? No. What? No. IS 37, Muzammil, IS 37 does not cover intangible assets. All right. You're randomly writing under or overstatement. By the way, Sufyan, etc., that's a 0000. Because you can't say under or overstatement. Everything will have under or overstatement, of course. Don't try to make a fool of the examiner, guys. All right, I'm minimizing the chat box. Some of you have very well identified, I'm concerned about the amortization aspect. I'm also concerned about, do I actually own it or not? Acquired brands have to be capitalized, have to be shown. So there is no question regarding whether it should be capitalized or not. I'm more concerned about overstatement due to amortization and overstatement due to, are you sure it is even yours? Are you sure the right even belongs to you? Next one, guys. These are all examples from your past papers. Next one. Let's be specific. My year end is 31st December 2017. I have shut down my purchase ledger earlier. So I shut down my purchase ledger 2 days before the year end. The risk, very well done. Cut-off issue, and in my specific example, your purchases are understated. Very well done, guys. Very well done. So my concern is that maybe transactions have not been recorded in the correct accounting period. So the risk is, in my example, it's understatement. I gave a very specific example, okay? All right. Some of my property, plant and equipment, I'm giving a specific example. Some of my property, plant and equipment is in transit. Oh no, hang on, let me change it. Inventory. Some of my raw material is in transit at the year end. Come on, guys. I'm opening up the chat box. Yes. So again, similar issue. Your inventory could be misstated, but particularly overstated, because you might have recorded inventory even though you don't have the control yet. So absolutely yes, inventory overstatement is the risk right now. Overstatement, particularly because I'm concerned because of the cutoff issue. It might not belong to me and I've still recorded it. Again, I'm going to be very specific. The bank reconciliation statement for December 17 has not been performed, guys. So I did it for the remaining 11 months, but there was no reconciliation for the month of December. What is the risk? Misstatement. Very well done. An increase in errors, and therefore my bank balance or my account balance in the SOFP, it could be misstated. Very well done. Come on. During the year, there have been certain transactions with the directors. This is from the past exam, guys. Come on, those of you who've done this, even if not. Sarah, no, it won't. It won't reconcile anyway. Come on, guys. Transactions with directors. Very well done. Bilal and Muzammil have the right answer. Hassan, that's the wrong answer. Vasanta, wrong answer. Tehreem, wrong answer. Please remember, guys, any transactions with directors are called related party transactions, and I need a disclosure for these transactions. So the risk is that the disclosure could be entirely missing or simply inadequate. So disclosure is what you call notes to the accounts. So maybe you've either not given these notes to the accounts at all, or it is missing. They have extended the useful life of property, plant and equipment. Come on, guys. So extended the useful life of property, plant and equipment. I will not accept misstatement, guys. Misstatement is not a word I will accept for this. Sarah has the right answer. Absolutely right, guys. Very well done. Guys, can you stop for a second? Please understand, useful life is an accounting estimate. This involves judgment. If I've increased the useful life, I need to evaluate whether there was a genuine need for this or not. So maybe I'm only increasing the useful life because I want to overstate my assets. So absolutely yes, my depreciation could be understated or asset could be overstated. So I will not give you marks until you tell me which area could be under overstated or missing. Before I stop with the examples, I need to tell you something, guys. I'm going to add a quick slide over here so I can tell you something. I want you to pay attention. In the F8 exam, when you're talking about risk of material misstatement in financial statements, a few things that you need to keep in mind. Misstatement is only a word that you can use for errors. You cannot use it generally. Only use the word misstatement if the risk is that there are errors. New ledger, new accounting system, new accounting standard, outsourced payroll, etc., etc. Otherwise, you'll have to tell me whether, and remember, this could be a class of transaction or an account balance. You'll have to be very specific whether this is understated or overstated. If you're repeatedly failing F8, it is possibly because you're writing under, over without thinking about the impact. You have to tell me whether an asset is understated or overstated. So account balance is for areas in the balance sheet. Class of transaction is for areas in the statement of profit or loss. They could also be disclosures, so not amounts, but disclosures, which could either be completely missing or it could be inadequate. So this is a slide which is very important when you're explaining risk of material misstatement in the financial statements. Then let's go to detection risks extracted from past exams. So in this scenario, if it says new audit client, please remember there would be a lack of understanding of client. So you might not be able to detect material fraud or error. So detection risk goes up. If you're being pressurized to reduce time, you might not be able to detect fraud and error. If you're being pressurized to reduce testing, your detection risk would go up. If your audit team does not have the required skills or expertise, your detection risk will go up. So keeping all of this in mind, we have done one part of risk, which is identify and explain audit risk. Remember, audit risk could include risk of material misstatement. It could also include detection risks. Then let's go on to the risk responses that you were asking about earlier on. This is the knowledge-based answer for risk. You know how knowledge-based means the straightforward technical answer. Guys, I want you to please pay attention. I don't know why you think risk response is difficult. Risk was that maybe inventory is overstated because it does not exist. Maybe the probability of me losing the lawsuit is high and therefore provision is needed. Maybe the development expenditure does not meet the criteria. Risk response is how will you get rid of the maybe. Right now, you only think this could be a problem. What further work will you do to get an answer to this? In F8, your risk response could be, I will have a look at this at the internal control stage. Or my response could be, these are the substantive procedures I will perform later on. Or it could be, I will have a look at it at the review stage of audit. So the risk that you find Are we connected to the?
Yes.
No, we're not. It's an internet issue because I've completed this. It's back. It's come back now. Right, guys. Sorry, I think we got disconnected for a second. Right. So again, my risk response could be, I will have a look at this at the internal control stage. It could be, I'll have a look at this from the substantive stage. It could be, I'll have a look at it in the going concern or subsequent event review. So the idea is, guys, that once you have found the risk, your response is, what's your plan? So Urdu में in a second, अभी तो आपको शक है ना, problem है, इस शक को कैसे खत्म करोगे? How will you eventually, what work will you do to find out whether there is really a problem? So for example, guys, and I'm going to make examples over here, you were concerned about the lawsuit, right? You were concerned that maybe it's either probable or possible. My response is, I will find out from the lawyer whether it's probable or possible. You were concerned that maybe development expenditure does not meet the criteria. My plan is, I will ask for the breakdown and I will check the criteria. My concern was that inventory at the third party might not exist. My plan is, maybe tomorrow, the day after, I can physically verify the inventory, or maybe I can write to the third party. This is important, guys. A risk that I didn't cover. But so, for example, risk was that they have a new accounting system. So the risk is there might be errors. So new accounting system, new system. The response is, I will perform TOCs at the control stage. So from the control stage, I'm now getting my response from the next, which is the control stage. So the idea is that response is basically your plan. What work will you do next? Will that be something from the control stage? Will that be a procedure from the substantive stage? Will that be something from the review stage? So it can be, your responses will come from the remaining three stages. So for example, the risk was that development expenditure might not meet the criteria. The response is, I'll get the breakdown and I'll confirm whether it meets the capitalization criteria or not. So responses are not very difficult, guys. Audit planning, we started off with making the audit strategy. I have understood the client. I have found out the audit risk. I am now about to move on to the next stage, which is materiality. I'll take questions now towards the end. Manaza, if there are any questions, I'll take them once I've finished the planning stage. So please don't type in your questions. If you type them up now, they will go all the way back up and they will not be answered. I'm going to wait to finish the planning stage, then we'll do questions, whatever questions you have. So please let me finish this. So once I've understood the client, once I know what the risk of material and misstatements and detection risks are, I'm now ready to work on materiality. The knowledge portion again is important. We know from our earlier studies, and a misstatement would be material if it affects the economic decisions of the users. So for example, a company which has a revenue of 20 million, a misstatement in revenue of $500 might not be material. Okay, so that's the idea we're looking at. Please remember, whatever materiality I'm setting now is judgment. There is no hard or fast rule for this. It is pure judgment. And very important, this is only preliminary materiality. So this materiality can change later on as well. If my risk goes up, my materiality will go down, because risk and materiality are inversely proportional. If there's a higher chance of fraud and error in sales, then even the small amounts will become material or important for me. So that's the knowledge portion of this. The application is, let's decide the materiality amounts right now. For F8, the guidelines are, for the P&L, I can set it on the basis of PBT or revenue. So 5% of PBT or 1% of revenue. For example, I choose suppose I'm choosing the PBT amount. 5% of PBT is 200,000. This means all items in the P&L above 200,000 are material for me. For total assets for the balance sheet or SOFP, it is 2% of total assets. Suppose that comes up to 750,000. So the first thing I have to do is set a materiality amount for financial statements as a whole, one amount for the P&L and one amount for the SOFP. The guidelines that we use in practical life are according to your own judgment. For F8, we will use these guidelines. In the P&L and the balance sheet or the SOFP, there might be some items which are material by nature. So they might be less than 200,000 or 750,000, but I will still have to test them in detail. So you have to make a list of items which are material by nature. Examples include all related party transactions. Examples include any area which affects my debt covenant or a law or regulation. So your auditing standards say, once you have evaluated the risk, you need to determine one amount for P&L, one amount for SOFP. You need to make a list of items which might only be of $1, but they are important because of their nature. And the last thing you have to do is set performance materiality for the risky areas. So for all the risky areas that you have found, you set separate materiality levels, which will always be lower than these overall materiality levels. So for all P&L items, my materiality is 200,000, but because sales is a risky area, I'll set a separate level for it, which could be maybe only 50,000. So if I go back, for materiality, I need to set one for SOFP, one for P&L. I need to make a list of items which are risky by nature, not nature's nature, and I need to set performance materiality levels for all the risky areas as well. Are we okay with sound? All right. And then the last thing, guys, scope, timing, and direction. Again, this is an area you need to learn. Within the audit strategy, you need to establish the scale of audit by making sure you're aware of all the locations and branches that this company has. Once again, making sure you're okay with the reporting framework that has been used. Is there any industry-specific law regulation which applies to this client? Will you be using an expert? Will you be using internal auditors' work? Has anything been outsourced by the client? Will you be using computer-aided audit techniques? So if the client's systems are computerized, which will be computerized, by the way, for F8, do you or will you be using computer-aided audit techniques? So 1, 2, 3, 4, 5, 6, 7 areas which come under scope. I want you to learn them. Timings is pretty self-explanatory. You need to set the deadlines for main work, the reports, the meetings, the communication, etc., etc. Based on all of this, you need to decide whether you will first test the controls, then go on to substantive, or maybe they have no controls, then I can focus on mainly substantive. Because guys, remember, if I go back, you have already understood. Where's the understanding? Let me go all the way back. Apologies for this, guys. Look, you have already gained an understanding of the internal control. So when you were trying to understand, you haven't tested them yet. You've only understood them. But in reality, your understanding is they have no systems in place. Then there's no point in wasting time in testing what's not there. So instead, what your direction should be, I will be focusing mainly on substantive testing and testing a lot of that as well. There you go. So scope, timing, and direction is done. And ultimately, this is where we are at right now. At this stage, you have your audit strategy with all the risky areas, and based on that, you can have your detailed plan about what's going to happen in internal control, what's going to happen in substantive procedures, and what's going to happen in the review stage. So you can now make a detailed plan as well. Guys, before I open up again the chat box, let's be very specific now. This is all your examiner's term. In audit risk questions, you will get half a mark from identifying only. So identification would mean, oh, by the way, they have a lawsuit pending and decision has not yet been made. This is half a mark. So this has to come from the question given. Another half a mark to explain the impact. You know how I said amount or disclosure? Impact is another half a mark. And then 1 mark for saying, oh, our plan is that this is what I'm going to do. So the further work that you're going to do, that's 1 more mark. Remember, this further work could be, I will test the control. The further work a lot of times is from, this is the procedure I'll take, or sometimes it would be, this is what I'll do at the review stage. So this sums up your planning section, guys. I'm opening up the chat box for a few minutes and then I'll get you to do a pass exam question. Opening up the chat box now. Okay. Guys, please do not ask me for specific responses. Every response has to be prepared by you. You can't rote learn it. You can't. It has to be a technique. You need to know that if the risk is of an error, you need to know what your plan is. So will I give you the answer for each response? No. Attempt the pass exam questions and you would know what the responses are. New Year system, Muzammil Hussain, why would we test prior year balances? This year, so 2017, I got a new system, right? During this year. So my concern is that amounts in 2017 could be incorrect because it's a new system. Then my response could be, let me test the system to see whether it's working or not. Aqib, I can give you a list, but I will not do it. So Mir Aqib Mohammed, I can give you a list of risk and responses from the past exams, but I'm not going to do it because that way you will not attend the past exams. So unfortunately, you'll have to do this yourself. I have a list, but I will not give it because that list you have to make from the past exams yourself. Because giving a list would mean you think that's only what will come up. Those are only 25 examples. Maybe your exam will be entirely from new risks. So I can't give you that list. Yes. Khazran Fatma, yes, you can write the relevant standard. Please, guys, make sure you know the standard. If you're not sure about the standard, then don't write the standard or the technical term. Muzammil, that's fine. You can start it like this, but make sure the response is very on spot. So you can't write test of controls for everything. Saad, the only way you can prepare for the risk questions is through past exams. There is no other way for preparing risk questions. So guys, those of you who are saying, we've done 2 stages of audit. The first stage is obtaining, accepting assignments. The second stage is audit planning. Absolutely yes, Zainab. Absolutely yes. Nikki, the risk questions can come in section A or section B or both. There is no format for this. It can come in both sections as well. At least 7 years. Osama, at least 7 years. So 2012 to 10 to 2017. All right, guys, let's start now. I'm going to give you 5 to 10 minutes. This is the question you have with you right now. It is extracted from a past exam question. I want you to, I'll give you, I think 5 minutes, or yeah, 5 minutes should be enough. I'm going to give you 5 to 7 minutes. You're going to read through this. You're going to find out 3 audit risks for me. Guys, pay attention. Audit risk could mean you can find risk of material misstatement, or you can also find detection risk. You will tell me the response to each risk, and then we'll see if you have the right technique or not. So 7 minutes from now, we'll start the discussion again. So you have 7 minutes to read through this and find 3 risks, also find the responses. guys. All right, guys, I'm opening up the chat box now, and let's see if you have the hang of this. I'm going to be asking very specific questions now. Oh, guys, why do you do this? Why do you type in all the answers? Okay, I'm not reading back. Neza, I'm not reading back. Okay, thank you. Okay, guys, I need very specific points. So I'm going to pinpoint a certain portion for you, and you will tell me the risk in these two lines. So I want very specific risk in these two lines. Okay, tell me very quickly, any one person. Goods are in transit, that's half a mark. Guys, we're focusing on marks now. Okay, calm down. Don't just jump into the question scheme. We're getting the marks. So half mark for identifying by writing goods are in transit for up to 3 weeks. Are we okay? Guys, stay with me on this. Okay, so half mark for writing that. Okay, so those of you saying, I'm reading all the answers and I'm not happy with the answers. Okay, guys, stop. Stop. Everyone stop. Everyone stop. Can you all stop? Stop, 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 stop. Okay. Noor Ahmed has probably the most appropriate answer. All of you who were writing, I want you to all stop, please. All of you who were writing understatement, overstatement, 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 that's a 0, 0, 0, 0, 0. You told me goods are in transit, and this is what you are writing. Goods are in transit for up to 3 weeks, and therefore inventory is overstated. That is not a complete mark, guys. You have to put in the word cutoff, or maybe the fact that they might be recorded in the incorrect accounting period, and therefore inventory could be misstated or overstated. So if you simply write under or overstatement without explaining it, I will not give you half a mark for explanation. Do you understand, guys? Identification you got when you wrote goods are in transit for up to 3 weeks. Explanation was incomplete until you brought in the word cutoff or whether it was recorded in the correct accounting period or not. What is the risk response, guys? So your question was, so your risk is they might not be in the correct accounting period and therefore cutoff might not have been done correctly. What's your plan? How? Very well done, Aneeb. I'm going to conduct cutoff testing by taking the last GRN of the year and ensuring before and after have been recorded in the correct accounting periods. So my answer is coming from a procedure at the substantive stage. Once I've prepared for the substantive stage, this would come up to me, this has come to me automatically. So response is a detailed testing for cutoff by taking the last GRN. So that's the plan for this. Good, very well done. Now I don't want you to make mistakes that you are making right now. The next risk that I want is from the next line. This one. All right, the next line, which is now highlighted in red. Can you tell me the risk, please? The risk in the next line. Identification is 1.3 million. Mudassir, you have an incomplete answer. 1.3 million development expenditure. The risk is criteria has not been followed, and therefore what is what? Overstatement of your development expenditure. Guys, it is not enough to simply write criteria has not been met. You have to tell me the risk is that 1.3 million, the development expenditure, so your assets could be overstated. I told you, you need to tell me your answer should end from under, over, misstatement of an amount or a disclosure which is missing. If your answer is not ending over here, then you're getting a 0 mark. So guys, even if, Sarah, even if it says it has been capitalized, that's what the management is saying. I'm the auditor. I have to confirm whether it meets the criteria or not. So I'm concerned that this has been incorrectly capitalized and therefore assets are overstated. Guys, why do you not listen to me when I said you need to mention end with an amount or a disclosure which is misstated or under overstated, and a disclosure which is inadequate or missing? What's the response? So what's your plan? How will you know whether the criteria has been met or not? How do you know whether, what's your plan, guys? You're concerned this 1.3 million might not be correctly capitalized. What's next? What are you going to do? How will you make sure it is the right criteria? No, disclosures is the wrong answer. You will obtain a breakdown of 1.3 million and match it to the criteria of IS 38. Inspection of documents, 0 mark. Sufyan, nature of expenditure, 0 mark. Again, breakdown should be reviewed and then matched to the criteria of IS 38. Aneeb, no discussion of accounting treatment, 0 mark. You have to tell me specifically how you will check whether this should be capitalized or not. So your response has to be, okay, I'm concerned this should not have been capitalized. No problem. I'll ask for the breakup. I'll match it to the criteria. So if it's in transit, I'm concerned about cutoff. My response is I'll perform cutoff testing. What is cutoff testing? You should know this because that's from the procedures. So it's stuff that you should already know because I'm assuming you've already prepared for F8 right now. If not, you can prepare it when we reach the substantive procedure stage. Second was maybe IS 38 criteria has not been met and therefore the response is fine, I'll check the criteria. Akib, risk identification comes from this scenario. Impact means which part of financial statements is under or over or misstated. So you have to tell me which asset, which expense, which disclosure is missing, etc. All right, guys. Moving on to the next one. I now need you to find me the risk from the next few lines. Hang on. Oh yeah. So in September from here to here, if you could please tell me the risks for this portion now underlined in blue. I want the risk and the risk response both, please. Let's start with the risk first. Very well done, Mudassar. They have included the training cost in the property, plant and equipment, which is not allowed under IS 16, and therefore your assets are, come on guys, your assets are what? Overstated. Very well done. You have to write this. I keep telling you, even if you write IS 16 criteria not met, I'm not giving you marks. Until, I'm sounding like a broken record now, until you tell me which part of, hang on, revenue expenditure is understated and assets are overstated. Please be very careful, guys. Absolutely, yes. So until you tell me that which part is under or overstated. So identification was training cost in 0.9 million. The impact is assets are overstated. What's your response? What are you going to do? What's your plan? What will you ask the management to do, guys? This is a very simple response. Come on. You know what the problem is? Absolutely, Ramiz. Don't say reverse. Don't say reverse. Just say you will ask them to take it. So adjustment has to be made. You'll obtain a breakdown of absolutely 0.9 million, confirm its training cost, and then you'll ask, the simplest 1 mark answer is, you will ask them to make an adjustment. Well, Vasanta has the right answer. So the simplest answer is the 1 mark by saying, oh, we're going to ask them to make an adjustment by taking it out of the capital expenditure and booking it as a revenue expenditure. Yes, Nida, you'll ask them to make an adjustment. Good girls and boys. Sorry, I'm treating you like my 6-year-old. All right, guys. Next, I want let's see how you find the response for this one. Come on, this line. This is an easy risk, guys. What's the risk over here? So they're getting a asset-linked bonus, and therefore assets could be overstated. Brilliant. At least you got that 1 mark. Oh, hang on. Who's writing profit? Why are you writing profit? Muhammad Bilal. Why are you writing profit, guys? What are you doing? The bonus is linked to assets, and therefore your concern is that assets could be overstated. Very carefully, what's the response? So you're concerned that overall total asset figure is overstated. So this can't relate to one specific point. What's your response? Wherever, and I'll give you an easy answer for this, guys. Wherever there is and no performing of breakdown in assets, no. If it's an overall profit figure, if it's an overall total asset figure that has issues, then the easiest answer is increase professional skepticism. There are lots of responses that you can write, but the easiest one for you is you need to increase professional skepticism and increase testing as well. Okay, guys? So for generic points where more than one area, no, Tehreem. Physical verification will only cover one part of your overstatement. No, you cannot say revised policy, let them get poor people, let them get asset-linked bonuses. No test of controls, no. Don't do random points, guys. Increase professional skepticism and increase testing on total assets. This simply means whenever Muzammil, I'm answering your question. Whenever I am working on total assets, I will already be alert that they have greater incentive to overstate assets. So I will perform greater testing. Exactly that. Yes. Your exact answer would be, my response is that we will increase our testing and make sure that we perform it with professional skepticism. It is a fraud factor. Yes, Tayyib. Guys, we know what really worries me right now, that when you ask me whether it should be written like this makes me think you haven't done the past exam questions and answers. Because anyone who has done past exam answers, you should be telling me the wording, not the other way around. So you know you have so much time left. You still have a whole month to go. Please make sure you start reading the answers, guys. Sarah, we have an online study school for F7 that's going to be very beneficial for you. So it's a very working professionals or other people who have other commitments focused one. So you can look at SCAN's online study school. You should be able to get the answer there. Yes, Muzammil. Increased professional skepticism basically means that you will be testing more, and for each test you'd be more alert to basically looking for problems as well, really. So more alert, more detailed testing. Guys, we're not done yet. There's one more. We have time, no? We have this. Yeah. Okay, guys, there's one more risk. Come on. The last one. I've intentionally chosen a question which had quite a few in small points. Okay, come on. The last paragraph. Could you tell me the risk first? What's the problem it is? Very well done. So the fact that he thinks that an allowance is no longer needed, the risk is that debt receivables might still be irrecoverable and receivables are overstated. Nikki, no understatement of receivables. Either right provision is understated or right receivables are overstated. Be very careful about your accounting, guys. If you're messing up your basic accounting in your answers, you will not get through the F8 exam. So if the provision is missing, that means your liability is understated or assets are overstated. What's the response, guys? What is the response regarding this risk? Discuss with the management what? Don't give me random points. I want to know what you want to discuss, Bilal. Come on, guys. Your answer has to come from one substantive procedure regarding recoverability of receivables. So if you're prepared substantive, no, Muzammil, no. You can't discuss whether receivable will pay or not. No assets, Serish, that's a very vague answer. Yes. Zainab, guys, listen up. When we do substantive on today's Monday, Wednesday, I have made the notes in a way that they're separate heading of recoverability. You can look at post year end. Yes, Sumbul. Chances of recoverability can be evaluated by checking if post year end any money has been received. Those who were writing, discuss with management. Your answer is, I will discuss with the finance director his rationale for not needing a provision. So why does he think everyone is going to pay now? No reconciliation with bank statement, that's a 0 mark. So guys, please, this is very, very important. Your technique, you know what? Can you guys stop typing for a little while, please? Zainab has a more appropriate answer. Allowances for receivables should be discussed if it is considered inadequate. Zainab, I still won't give you full mark because the management has said we don't need it. You need to ask them why not. You need to ask them the basis for saying that we don't need it. Guys, I need you to stop typing for a little while, please. I have a very important wrap-up thing to make. I'm going to go back. I'm just going to sort of minimize the chat box now, so I can't see your comments anymore. When you are now preparing for these topics, so we've done 2 topics, right? When you're preparing for these 2 topics, you need to keep in mind this thing. And 1, 2, 3, 4. Understanding audit risk, materiality, scope, timing, direction. So you need to know that these are the stages or the process of audit. The rest of this is knowledge-based, but when we have questions from this stage, you have to make sure that your responses come from your further preparation. Now, the important part here, please guys pay attention. When I teach audit in class, I never do the responses at the planning stage. So my technique is, at the planning stage, I only teach them how to identify and explain the risk. I cover the next stage, which is evaluating control. I cover substantive, and then when I discuss risk responses, students give me the answers in a second. Because then I've prepared what happens at control stage, I've prepared what happens at the substantive testing stage. So the best way to prepare for response is make sure you cover the rest of your syllabus. Your responses will automatically be prepared. Same areas that you record as risk over here, you're going to be testing at later stages as well. So actually, when you cover these 3 areas, your responses will be coming automatically. So don't worry too much about this. Can I also please say that when you go back home today, this is the one. When you go back home today, guys, please access the platform. Particularly if you're taking a computer-based exam, when you access your platform, you are going to see 2 questions on risk that now you can practice as if it is an actual exam. So in section B, constructive response, long form question, you have 2 questions on risk. You can type up the answer, see if you know the risk, see if you know the risk response. The techniques for writing the answer in a computer, I will cover probably on the 5th day. I'll show you a few techniques tomorrow as well. I'll try to access the platform in the middle of the session so I can show you how you could have answered this. But other than that, please make sure you use those questions as practice, because it's not just knowing it, you need to be able to put it into the software as well. Thank you so much, guys. Just to give you an overview, tomorrow we are going to focus on this portion. So tomorrow we are planning on evaluating internal control over financial reporting, and then we will do the techniques similar to what we've done today as well. Thank you so much, guys, for being such a wonderful audience. And I'm sorry if I was scolding you like a kid, because, you know, you are kids really. So I will now see you tomorrow for the next portion, which is internal control. Just very quickly, these slides will be uploaded and you will be able to access them today as well. Okay. Thank you.